Welcome back to the Brent Bruce Daily. Today is September the 26th, 2022. It is now 3:12 p.m. Central Time. And man, oh man, are the markets still reeling from last week's reports and news that came out from the Federal Reserve and the overall feeling that inflation is not under control. So the comments from Jerome Powell just really have not been well received. And really every part of the economy has been reeling since that day occurred. Right now, we are down 148 basis points on our mortgage-backed security, the largest drop that you've seen on the Brent Bruce Daily. We haven't seen a drop that large for a long time. I have seen worse, but a very large drop in the mortgage-backed security market, down 148 at this point. The 10-year Treasury up 21. That is not good news. We do not want to see the 10-year Treasury up 21, coming up to the point that we might even be breaking through 4%. If it gets much higher. We don't want to see that happen. Hopefully that 4% will act as a ceiling of resistance, and then we won't see any more damage here in the near future. Now, today we were down a little bit further, more than 148 basis points, and we did see a little bit of a rebound. So we are hoping that there are some floors being created after this response, and this really exaggerated or long response from the comments from the Federal Reserve. So how are we doing on the Brent Bruce Daily? How is this equating to home loan interest rates? Well, let's take a look here at the Brent Bruce Daily and see where we were. We're talking about 6.625, I believe, is where we ended off last week. And right now, we are actually, it says 7%, but we're actually at 6.99% at United Wholesale. Now, let's open this up here. I want everyone to see the structure of the scenario that we're looking at for compliance purposes. But if we open up this 6.999, 6.875 is not far, only $842. Now, I had been talking about, and my projections had been that we would not go into 7%, and if we did, it would be brief before we come back down. So this is where we're going to see if my expectations are correct, because we are definitely reaching the height of what my expectations were going to be as far as how high we're going to go in the home loan interest rates on the Brent Bruce Daily Report. Now, when do we see in the future, when do we see relief? Well, the PCE and the CPI numbers, so the personal consumption expenditures and the consumer price index, are what we are looking at. Okay, so it's very important that we pay attention to these numbers. September is not really where we think we're going to see a benefit. We think we're going to see some change on the October numbers, the November numbers, and the December numbers, because when you look at 12-month reviews, the numbers that we will be replacing for October of 2021 were rather high. That gives us a better opportunity to have inflation numbers come in, even if they're at 0.3, 0.4%. Hopefully that's lower than the number that we're replacing, a 0.6, a 0.7, which gives us an overall year-over-year drop in inflation readings, and we start to see the effects of the Federal Reserve's increases that have been going on throughout the year finally panning out for us. So that is what we're hoping to see. I will keep you posted. Let me know what your thoughts are. Make sure that you like, subscribe, and share, because now more than ever, we need to know what is going on. Have a great day, and I'll talk to you again soon.